Well, NDRC Vice Chairman Ning Jizhe also spoke about China's efforts in attracting foreign investment. He outlined several key points, including improving the country's investment environment and expanding market access. Xia Cheng has the details.
The NDRC gave us a very rosy picture here. They say they're starting to further open up the Chinese market, and they welcome foreign investment to come to China to invest in the Made in China 2025 program and also the technology sector. And they say the foreign capital has become a very important part of China's economic growth in 2017.
China has been gradually improving its policies to attract foreign investment. Our achievements on absorbing foreign capital benefit from the opening up policy and improvement of the investment environment. Over the past few years, we have introduced a series of positive and effective policies for foreign investment to adjust the complicated changes from internal and external economic situation.
And they say they won't even have any discrimination when it comes to government purchases. So if that goes well, then foreign investment might get a boost here in China. Remember, China is still the world's second most attractive place for foreign investment. And also we are seeing that the government is willing to expand the market access of service sector, and they are trying to fully open the manufacturing sector as well.
Well, let's go live now to Beijing, where CGTN's Xia Cheng is standing by with more on China's two sessions. Xia Cheng, of course, just start by telling us more about the highlights of the two sessions today.
Right, it was the first press conference after China issues the government work report on Monday, and we are still wondering how China will achieve the 6.5% growth target this year. Because the downward pressure lingers. We have external ones like the China-US trade tensions and domestic ones like the debt piles and bad loans. The NDRC said consumption now accounts for about 60% of the GDP, and investment will bring another 1/3 of the economic output, and trade will bring in another 8 to 9%. And that's quite a rosy picture out there. But the NDRC admitted that gray rhino event risks do persist, and that means China will continue to squeeze debt out of its economy and tame overly borrowed companies. China needs solid economic fundamentals to make short-term pain from the deleveraging drive less severe. And there could be a drain on China's outbound investments. Many companies have been borrowing aggressively to fund their global buying spree, and assets in Africa are some of the top picks. And now those companies could not continue their expansion, cannot expand their balance sheet further, and they don't have the cash to close overseas deals. And that is one of the most prominent short-term pain of the deleveraging drive here.
And of course, that's just one of many key issues on the agenda. Just talk us through what's still to come and what we should be watching out for.
Right, so lawmakers will vote to appoint a new governor to run the People's Bank of China, the central bank, on March the 19th, and we will be closely watching that. And many analysts have been saying that the extra focus on preventing financial risks has made policymakers such as the central bank too cautious on market opening up and innovation, and that will be a big question asked at the central bank's press conference in the next couple of weeks. This time, we are glad to hear that foreign investment is also welcomed in state-owned enterprises, and China has scrapped ownership limit on the foreign banks in their China ventures as well. But the market reactions have so far been tepid. To be fair, China has taken actions that foreign lenders have long called for, but bank executives say it just wasn't enough, and the policy swings in China and the political uncertainty, including the China-US trade tensions, are keeping some of the cautious foreign investors at bay. We will see how China is planning to further open its market while building confidence here in the coming weeks. And green economy is also a hot topic at the NPC too, and analysts expect new policies to promote a new energy and a green manufacturing. So advanced manufacturing, big data, and artificial intelligence, these higher value-added, greener sectors will have more room for growth, of course. And we are also looking at housing market, and it will be a main topic, and we may see new developments on China's property tax, and that will be a main talking point on Wednesday's finance ministry press conference, and I will be there as well. The tax is likely to come before 2020. Back over to you.
Well, thank you so much, Xia Cheng, keeping a close eye on developments there for us at the two sessions. joining us there live from Beijing.